What's up guys, welcome back to the channel. In today's video I'm going to teach you a scalping strategy. So let's jump straight into it. This is GBP USD and this is the 1 hour time frame, and from what you can clearly see from here, if you try to look from this area, what you can clearly see is that we got a shift in market structure from this area. And after we got the shift in structure, if you try to measure with your FIB2 from this high to this low, you will see that price returned into the discount area before a continuation to the upside. And if you look at this area, this is our current low and this is our current high. If you try to equally measure with your FIB2, what you can see is that price retraced into the discount level before we see another continuation to the upside, and that is how price has been moving. And if you try to see what we have right here, after price formed this low and a continuation to the upside. So if you look closely, you can see that this is where we got this break of this high. And if you try to measure from your current low, because this is your current low and this is your current high before this retracement to the downside, what you can clearly see is that price also retraced at least into the discount area. You see price came very close to the discount area before the continuation to the upside, and it has always been like that. So after price formed this, we have a pullback. So if you try to measure, if you see this as your low and here as your high, what you can note is that price retraced back into the discount area before this continuation to the upside. I hope you can clearly see that. So this is what price usually do. When price forms a high, we usually expect a retracement at least into the discount area, and this is where price is currently. And if you try to measure from the current low to the current high, you can see price is yet to retrace back into this discount pricing. So what we can do right now is how we can actually take trading decision, how we can actually short back into this range before we expect a higher prices. I hope you understand what I'm trying to explain. So let's zoom in into this chart right now and let me explain what we have and see how we can actually take advantage of some of this. And if you look closely, what you can clearly see from here is that price form a high, a low, a higher low, and here is a higher high. So this is more like an internal structure. So let's drop to the 15 minutes time frame so we can see what we have here clearly. So here is the 15 minutes time frame, and you can clearly see the structure that I'm talking about. You can see this is where price formed this first high. After the high was formed, we see a retracement, a higher high being formed. This is our higher low. Price moves massively to the upside, forming another higher high, and now we're getting a retracement. So what you should keep in mind that this is our trading range right now, okay? If you know how to read market structure correctly, you should know that this is our trading range. Price is in this range. So anything you see price doing inside this range, try as much as you can so you don't get confused, okay? So let's press price forward and see if price can actually continue, because what you can see is that price is in this range. So our expectation is that price is going to mitigate an order block or a demand zone at this area and a continuation to the upside. This is our first expectation. So let's see how it goes and see what price presents to us. And now you see price taps into the zone. You see a little reaction to the upside, and let's see what price does. And you see price takes the low. I hope you can clearly see that price breaks lower and it takes this our higher low. So what you should keep in mind is that we're having a shift in market structure because price takes our current higher low. So now price takes our current higher low, you should now expect a deeper pullback to the downside, okay? We're going to expect lower prices. We're going to expect price to retrace back into this particular range, because you know this is our trading range. You know what I'm showing you here is more like an internal structure, but if you look from the higher time frame, what you should note is that this is our low and this is our high. So we are in this range. So what we are seeing right here is just the 15 minutes structure, and I hope you understand what I'm explaining. So now that the 15 minutes switch in structure, what you're going to expect is that price is going to retrace into this range, okay? Price is going to retrace into this range, and we're going to expect price to retrace to at least into this discount area. And what we're going to do is how we can actually get involved into this trade setup, how we can get a trade setup, we can trade back into that range. So if you understood when I explained multi-time frame market structure, that is top-down analysis, if you were able to pay attention during that lesson, you should understand exactly what I'm explaining in this video. So if you look into this range, you can see price takes this high. We have a liquidity sweep at that high. So the liquidity at that area has been taken by price, and if you look over here, you see price takes this other high. So this is a liquidity sweep, sorry. So you see the liquidity at those highs has been taken out. Okay, so here is a liquidity sweep, and if you try to mark, you can see that this area has been mitigated. I hope you can see the zone at that area after the liquidity sweep has been mitigated and price has been pushing to the downside. We have more like a trend line liquidity at this particular area, and you should also have it in mind this trend line liquidity has been swept because price reversed to the downside and it clears out this sell side liquidity. Now zooming into this area, so let's press price forward and see what we can actually do with this. Now you see price retrace back into this particular range. Okay, so price formed this low and we have this retracement back into this range. Now if you want to take a trade, we'll be looking to trade from maybe a supply zone at this area, but you see we have a lot of wick right here. You see the wicks right here are too much, and a lot of people including me might not really love to trade from this kind of area, because what I want to see is maybe a very good candle followed by a rapid move just like this one, but there should be at least a market inefficiency. If we had these wicks right here and we have an inefficiency, that is a fair value gap at this area, I could look to manage and mark from the wicks, but over here no inefficiency and there is nothing serious happening at that area, so plain price forward. Another thing I could actually do is I could look to activate my session indicator and look to make use of my session high and low. Okay, that is the Asia high, because we know that the Asia highs and lows is a liquidity area, so I can take advantage of that and look for my liquidity sweep pattern and trade from that pattern. And I hope I've explained how to trade with a liquidity sweep pattern. So from what you can see, this is my Asian range. I've activated my session indicator. I use session on chart, so if you go to the settings, you see I deactivated London, New York and Sydney, and my Tokyo session is on, and this is my Asian range. So from what you can actually see, this is my Asian high. We can actually label it as my Asian high, and let's press price forward. But currently this is the current low we have, that is for the Asian session. This is the current low, so we can actually label here as our Asian low. So this is another way you could actually take advantage of this trade. Smart money strategy has a lot of concepts, so it's now left for you to combine these concepts to build high trading, or will I say high probability trading ideas. So let's see what we have from this area, and you see price continues into this range, and now what can we actually see? What you can see is that I have to take this back to this area now. So what you can clearly see from this area is that this is the most recent Asian low, and price sweeps the liquidity. You see how price sweeps the liquidity rapidly and it moves to the upside, and it also went along to sweep the liquidity at the Asian high. According to our analysis and according to our bias, is that price is going to retrace into this range according to our analysis, because we've seen once price forms a new high, when we be on the 1 hour time frame, it retraces back into the range and it retraces at least into the discount area before the continuation to the upside. So when price took the Asian low, we might not look to go long because we are bearish. That is on the 15 minutes time frame. Okay, we just got a shift in market structure, so we're expecting lower prices from this area. Now what you can clearly see from here is that this is the Asian high and price moves higher to take this Asian high. So let's press price forward a little and see. What you can see is that price sweeps the Asian high and we now having a pullback to the downside. So what you can do is you can go to a lower time frame to look for areas you could get your entry. So we analyzing on the 15-minute time frame. So the time frames you can actually use for your entry could be the 5 minutes, 3 minutes, or the 1 minute time frame. So let's use the 3 minutes time frame and see what we have right there. So what you can see is that price sweeps the Asian high and we're getting this retracement to the downside. And if you look, we equally have a lower time frame market structure shift over here, because if you try to look, we have a pullback and a high that swept the liquidity above this Asian high, and so this is our lower time frame market structure shift, right? What we can actually do right now is we could look to mark the zone which we will be looking to trade from. Okay, so this could be a very good area because you see we have multiple bearish candles, and this candle, you see this bearish candle was not able to engulf this bullish candle right here. So I can take this bearish candle as my order block. Okay, this could be the order block which I will look to trade from if price eventually comes back to this area, and where could be my target. So personally, the way I trade, if I want to go short, this should be the area I'll be going short, my stop loss above this high. Why do I have the confidence to go short from this area? Remember the liquidity sweep pattern. We have a liquidity sweep of the Asian high. We have a market structure shift. This is what I've been teaching on this channel. There is no difference from what I've been teaching. And if you look closely, you can see that we have an imbalance right here. You see, we have a fair value gap at this particular area. So there is need for price to come back to this particular area. Now, if I take this trade, my profit target is always 1:4. So where is my 1:4? I'm taking my entry right here, stop loss above this high. So 1:4, where could it be? So this is my 1:4 right here. You see right there, this is where I could take my profit. And for some other people, where could they look to target? Some might look to target the low of this area. Okay, so this is based on personal preference. Everyone has their way of marking zones and the way they might look to take their trade. So this is where some of them might look to take their profits, stop loss above this high. Some might go for this low we have right here. And these people that took this trade from that area, you can see they have about 1:6 risk reward, while I'm going for 1:4. And a lot of people might actually go for at least the equilibrium level. So let's go to the 15 minutes time frame so you see this clearly. Now, a lot of people might actually go for this area right here, because if you try to measure with your FIB tool from the current low to the current high, so this is the low right here, and here is our current high. So you might see a lot of people coming to take their profit at this equilibrium level. You know, there are people who has the confidence. I guess this set of people, they know how to manage their trade properly. Okay, some of these people, they are good in trade management, so they might enter their trade right here. Where is the target? The equilibrium level. Target right here. Remember, here is their entry, and stop loss is above the high. So there could be their targets going for 1:4. These second people going for 1:6, and this is about 1:10. Okay, 1:10. Let me do it correctly. 9.8. So that's about 1:10 RR. And just from what you can see, this is our Asian high, and this is the Asian low. This is where we got in the confidence to take this particular trade. Okay, now time to play price forward and see if you can actually get involved in this particular setup. I see price moves away. I hope you can clearly see price moves away from that particular area, but what you should note is that we have our setups right here. And if you see the way I trade, the moment price moved away from this particular area, I might decide to look for some other place to take my entry. But if you look, you can see the price action we have at these areas is efficient, apart from the one we have right here. If you look at the 15 minute time frame, you can see we have a larger fair value gap at this particular area, and apart from there, you can see the price action at these areas is efficient. There is no inefficiency right here, apart from this area that was very close to the equilibrium level. So I won't be interested in looking at those areas. That means I will still stick to this, my point of interest. I will stick to that and wait for price to come back and tag me into this particular trade. So let's see what we have over there. Now price is taking a very long time to return back to this particular zone, and I think I should extend my zone. And one thing about trading is you have to be patient enough. And what can you see? Price finally comes back, and you see how price paid us immediately. Price didn't, after price wasted a lot of time, immediately it mitigates our zone. You see that rapid push to the downside, and you see everyone was paid immediately. Me that is waiting for my 1:4, you see I was paid immediately after the pullback. And if I actually took this trade, you see immediately price comes back to tap into our zone. How long did it take price to pay me? Just in 15 minutes I was out of the market, and the person that waited for the second entry, person was equally paid in less than 30 minutes. The funny part is that the person that took the third trade, 1:10, this is crazy RR, the person was equally paid. And if there was any other person that waited for this particular area that is extending this person would have gotten 14 hours. So this person, I think he was actually paid equally. Okay, see price takes that low, and you see each and every one of us was paid, and we'll be smiling back home happy.